Welcome to the Daily Consolidation, your 5-minute briefing on today's market action. The views shared here are not personalized financial advice and are for informational purposes only. Consult with a financial professional before making any investment decisions. Now, let's dive in.
Well, today was a textbook example of how quickly market sentiment can pivot on just a few sentences from the Federal Reserve.
It really was. The entire atmosphere just shifted.
It did. And it was all thanks to some markedly dovish commentary led by New York Fed President John Williams.
And Mary Daly from the San Francisco Fed backed him up too, right?
That's right. And the effect was not subtle. It was immediate.
I'll say. For you, the most important takeaway has to be the speed of it all. The market odds for a December rate cut, they surged from below 40%.
All the way to 71%.
In a single session. That's a massive repricing event.
One of the fastest we've seen all year. And it was just an immediate trigger for a rally across, well, pretty much all risk assets.
Right. The S&P 500 jumped about 1.5%.
And the Nasdaq had a blockbuster day, surging almost 2.7%. That was its best single-day performance since May.
Which just shows you how sensitive those tech stocks are to the prospect of cheaper money.
Exactly. And we saw that relief everywhere. Look at the VIX, the market's volatility gauge.
It just compressed, dropped over 11% today.
And that fed straight into the bond market. 10-year Treasury yields pulled back to just under 4.04%.
And gold, of course, celebrated.
Okay.
Up over 1.6%.
This is where we hit a really key contradiction that you need to be watching.
Okay.
Normally, when the probability of a rate cut jumps 30 percentage points, the U.S. dollar should, tumble.
It should, but it didn't. The DXY held steady at 100.18.
Which is genuinely fascinating.
It really is. It suggests that even though the market is pricing in Fed cuts, there's something else going on. Stronger forces at play.
Could be. Maybe it's continued safe haven flows, or maybe the growth differentials between the U.S. and, say, Europe are just overriding the monetary policy signals for now.
And that narrowness was on display in the equity markets, too.
Oh, absolutely. While the rally was broad, the leadership was incredibly narrow. Much of that optimism was focused squarely on AI.
Like Alphabet, up over 6% today.
A huge move. All following their Gemini 3 model announcement, which even got a high-profile endorsement from the CEO of Salesforce.
It's important to keep that enthusiasm in context, though, right, when you zoom out.
When you zoom out, the S&P 500 is still down roughly 2% for November.
And the Nasdaq is down 3%. So today was great, but we're only starting to recover lost ground.
A very good point. Now, looking at other asset classes, the rate-sensitive sectors definitely participated. The Vanguard Real Estate ETF, the VNQ, gained 1.6%.
And maybe more importantly for a lot of people listening, the average 30-year fixed-rate mortgage rate actually dipped to 5.95%. That's the lowest it's been in almost a month.
The one outlier today, though, was energy.
Yeah, crude oil fell about 0.5%.
And that was reportedly on news suggesting productive peace talks between Ukraine and Russia, which the market sees as bearish for supply.
And what about crypto? Bitcoin showed a bit of a recovery.
A modest one, yeah. It gained about 1.35%. But you have to look at the fragility there. Just last week, we saw, $1.2 billion in net redemptions from the U.S. spot Bitcoin ETFs?
$1 billion.
Yeah.
That's a massive outflow. It suggests a lot of nervousness under the surface, despite today's bounce.
Deep nervousness. So as we head into this shortened trading week, and remember, Thanksgiving means the market is closed Thursday and closes early Friday.
Your focus has to turn to tomorrow. We're getting a ton of delayed economic data.
We are. The September retail sales numbers and the September producer price index, the PPI. These are critical data points that the FOMC will be scrutinizing before their meeting on December 9th and 10th.
And if today taught us anything, it's how sensitive the market is to every single piece of that news right now.
Yeah, exactly.
That's all for today's episode of the Daily Consolidation. If you enjoyed our analysis, remember to live